And the world, the BIS, the IMF, the BRICS, China, Russia, Saudi Arabia, they're all looking at gold too. Don't underestimate why, and don't underestimate the implications behind that. And if you think the US dollar is immortal, you're right. It is immortal. It's not going to die. The British pound sterling didn't die. The prior world reserve currencies didn't die. They just got weaker and repriced. And I think gold is going to be revalued. I know it is. It already is. I look at gold as a reserve asset, a savings asset. I look at the US dollar as a spending asset. If I need liquidity, dollar's king. If I look at purchasing power and reserve status, gold is king. And I'd rather have a crown of gold than a crown of paper. So I save in gold and I spend in dollars or francs or euros, depending on where I am.
Matthew Piepenburg, a distinguished partner at the renowned precious metals advisory firm Von Gartner's Gold, offers a variety of insights into the enduring appeal of gold. Matthew acknowledges that while gold might face short-term volatility, especially during major market downturns like the 2008 financial crisis, its remarkable resilience shines through. He contends that even when gold experiences temporary dips, it often recovers faster than other assets, highlighting its enduring long-term value proposition. Recent market trends support Matthew's perspective. Despite a modest 0.5% dip last week, gold has swiftly rebounded and is nearing all-time highs. Year-to-date, gold has surged nearly 20%, driven largely by speculation about potential Federal Reserve rate cuts and easing inflationary pressures. This bullish sentiment is further supported by the cooling labor market, making gold's economic landscape increasingly favorable. A significant trend Matthew notes is the rising appetite for gold among central banks, particularly in Eastern nations. Since 2022, following the U.S. decision to freeze Russia's foreign exchange reserves, many countries have been diversifying away from U.S. treasuries and increasing their gold reserves. Join us as we examine why gold remains a tempting investment option by exploring into Matthew's comprehensive research.
I mean, the volatility we saw and everything else was off the charts, and the VIX to the futures and the NASDAQ, certainly the Nikkei, and certainly compared to Bitcoin. That said, and we've always agreed that gold is very sympathetic in a market sell-off. Everything goes down in a lower tide, but comparatively, it did far better. I never look at gold day to day or month to month, frankly, even quarter to quarter, because I'm looking at it in a much more longer-term trends. There's this guy, Henrik Zeberg, I think, out of Scandinavia, who says gold's going to go way down in the next market crash like it did in 2008. Again, I could be wrong. I'm certainly biased in favor of gold. I think we all are who are watching this, and certainly you and I are. But let's play the lawyer here and look at both cases. You could argue on the negative case that gold is just another asset class that tanks when the tide goes out and it's sympathetic to the markets. But even if that were true, even if you take the '08 template, it rebounded much faster than everything else. Gold, as we all know, can be used when you need to make a margin or you need to pay for the losses in your bad investments. You sell off your good investments. That may sound like an apology for gold, but more importantly, I think 2024 is very, very different than 2008. And we can get into all the kind of technical charts, and we can get into all the comps historically, but let's keep it, I think, relatively simple, because the simple stupid is so simple right now. And these are things that aren't making the headlines, but are absolutely massive in favor of where gold's longer term direction is going. And I think one of the most obvious is just the Bank of International Settlements. Not my favorite place to be, not my favorite people. If we did a show just on what the BAS does, it would make people very nervous. And they're immune from prosecution, immune from taxation. They live very well doing a lot of bad things. But even the BAS, they're politics. They're political, and they know they see the right on the wall with the US dollar. And just last year, which very few people understood, the BIS made gold a tier one asset. The only other tier one asset in the BIS is the US Treasury. Why did that happen? It's not a coincidence, because the BIS knows what the BRICS know, that no one wants to use the dollar anymore, the US Treasury, as a reserve asset. It's a liquidity asset. But to save and store value, gold has just been elevated to a tier one asset. Okay, that's a very important headline in and of itself for the longer term direction of gold, not the chart that happened in the week of August 5th. The other obvious thing is Eastern central banks. Again, since 2014, no one's been noticing. Eastern central banks in general have been net selling U.S. treasuries and net buying gold at historical records. Again, why? Why are they dumping U.S. treasuries and buying gold and then increasing that since 2022 when we weaponized the dollar and took the FX reserves away from a major power like Russia, which is in bed with China and selling oil back and forth to each other in yuan? Why is that happening? It's not a coincidence that the world and the central banks, watch what they do, not what the pundits say, are dumping treasuries and stacking gold. You've got 30 nations in the last year and a half who've been repatriating gold out of the COMEX and the LBMA banks. Why? Because it's a tier one asset. Gold is becoming far more important as a net settlement trade asset. And so you've also got the COMEX and the LBMA banks seeing massive outflows of physical delivery because people don't want to play the churn and extend game. They want their physical assets. You've got 45 nations trading outside the US dollar. That's not going to change the FX power of the US dollar overnight, but it's a clear and obvious trend away from the US dollar. You've got the oil trade trading more and more outside of the petrodollar. Again, Saudi Arabia, the UAE, they're pegged to the dollar. They don't want to see the dollar die, but they are moving away from the dollar. The UAE and Saudi just joined the BRICS, and they're making deals with other countries to sell outside of the petrodollar. It has a massive impact on the US dollar. No one is really talking about that. The rise of the Shanghai exchange is now the third largest exchange behind the COMEX and the LBMA banks. And even the IMF, and along with the BIS, are already again talking about using gold to back the new central bank digital currency that they're going to try and unleash when things really hit the fan.
Piepenburg notes that although there may be short-term swings, it is crucial to have a long-term outlook on gold. This is supported by historical evidence, which indicates that even during times of low volatility, gold frequently rises during uncertain financial times. This pattern supports gold's long-term reputation as a trustworthy store of value. The balance between short-term fluctuations and long-term prospects is evident in the recent market behavior. At $2,450, gold prices experienced a minor decline on Monday during the early Asian trading session. Because the US dollar usually swings against gold, this decline was primarily caused by a slight recovery in the US currency. In light of the growing geopolitical unrest in the Middle East, economists assume that the downside of gold prices may be restricted. Even with reports of hostilities increasing, the region's continuous conflicts continue to fuel demand for safe haven assets like gold. The gold market showed good momentum after its initial decline and swiftly recovered. The market's general expectation that gold will continue to rise in the long run is reflected in this quick recovery. Let us now return to the interview and hear what Piepenburg has to say.
Well, look at the world is doing. Look what the BRICS are doing. Look what the BIS is saying. Look what the IMF is saying. Look what the petrodollar is doing. Look what's happening in the COMEX and the LBMA markets. They're all preparing because they see that army marching across the river. They're stocking up, they're loading up in gold because that is going to be the new reserve asset. It already is under the BIS's terms. It already is under the BRICS actions. It already is even in the Gulf oil states. And the price of oil is far more stable when there's gold backing than which is dollar backed. So it's not even anymore in the best interest. It's not going to happen overnight, but it's already happening quickly. These are the longer term trends, Kai. They're so obvious and not gold bug sensational that aren't being discussed by the Fed naturally, or by Goldman Sachs or JP Morgan or even Credit Suisse, because we can get into that. There's a vested interest in not seeing gold rise. But again, get away from the daily charts. This is not an apology for gold's down moves. Of course, it doesn't move in a straight line, but look at the historical charts. Look at the longer term trend. Gold can go sideways for years and then rip north. And to Rick Rule's point, it will reward extravagantly, infrequently, but extravagantly. But look at history more than daily charts. If you're an investor looking at 5 or 10 years instead of 5 or 10 minutes in a tweet, gold is very obvious. If you're a trader or a speculator, God bless you. I respect that. I was a trader and a speculator. It makes money. If you know how to do it well, God bless you. But for investors and for family offices or high net worths or middle class that are thinking longer term to protect themselves against the open death of their purchasing power of their currency, gold's longer term trend is up and to the right. So if you're looking at a window of more than 3 weeks or 3 months and you're thinking long term, the trend for gold and the actions, not the words, but the actions of the gold market speak so loudly that my biggest fear right now, Kai, is I have too much conviction in gold. It makes me too confident. I've never, as a lawyer thinking left and right or both sides of the argument, I've never been this confident about an asset class longer term. The short term moves, I mean, again, we have clients in 90 countries, Kai. They never call us whether gold's at all-time highs or retracing. They never call us to ask about the gold price because they invest in gold as a wealth preservation asset. Also, by the way, it outperformed the S&P total return in the last 24 years. Doesn't make the headlines either. Even as an optionality for return, it's outperformed year over year.
But that's ex-dividends, I think.
Yeah, well, exactly. But it's still, we don't look at though as a speculative asset. We look at it as currency insurance for openly dying currency, longer term. And the world, the BIS, the IMF, the BRICS, China, Russia, Saudi Arabia, they're all looking at gold too. Don't underestimate why, and don't underestimate the implications behind that. And if you think the US dollar is immortal, you're right. It is immortal. It's not going to die. The British pound sterling didn't die. The prior world reserve currencies didn't die. They just got weaker and repriced. And I think gold is going to be revalued. I know it is. It already is. But the daily moves, I'm not trying to be flippant or to ignore the question. I'm being honest, I don't care about the daily. I don't care about the daily moves because I'm looking at the historical moves and I'm looking at the historical death of the US dollar and other fiat currencies since we decoupled from gold in 1971. It is an historical fact that they've lost greater than 95% of their purchasing power when measured against gold. I look at gold as a reserve asset, a savings asset. I look at the US dollar as a spending asset. If I need liquidity, dollar's king. If I look at purchasing power and reserve status, gold is king. And I'd rather have a crown of gold than a crown of paper. So I save in gold and I spend in dollars or francs or euros, depending on where I am.
In his concluding remarks, Matthew Piepenburg made a strong case for why gold is still a vital asset in the ever-changing global environment of today. He highlighted that although some people may be distracted by brief changes in the market, the larger patterns are evident. Nations and institutions around the world, from the BRICS countries to the Bank for International Settlements, BIS, and the International Monetary Fund, IMF, are increasingly viewing gold as a cornerstone of financial stability. He also emphasized the significance of concentrating on historical trends rather than just current price charts. When you take into account gold's ability to preserve wealth in the face of declining fiat currencies, its value as an investment for long-term investors becomes clear. When compared to gold, the dollar and other fiat currencies have lost more than 95% of their purchasing power since the United States separated from the gold standard in 1971. Matthew's ultimate message is clear. Gold is not just a speculative play, but a crucial insurance policy against the inevitable decline in currency value. As the world quietly pivots towards gold, those who understand its long-term significance will be well-positioned to protect their wealth. So, as you consider your investment strategy, remember Matthew's words, "I save in gold and spend in dollars." The implications of this approach could be vital in the years ahead. Until next time, happy investing.